What's up everybody? Tom here with another video. In today's video, we'll be discussing why this chart is the one to watch over the month of April. We'll also be taking a look at our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, Tesla, and more. This one should be good. Stay tuned. Well, as we like to do on this channel together, let's take a look at what happened in the stock market over the last 24 hours. And it was really green for the banks. The banks recovered after that scare with the leverage, with the opportunity of potentially having some kind of contagious effect due to all that liquidation that occurred late last week. We also have Tesla up 3.98%, which I know many of you in the comment section down below will be happy about, holding the line at 600, a very strong level for it to do so. Tech was mixed, and the rest of the market was relatively mixed. All right, well, let's take a look at these indices. And yesterday was all about the Russell recovery. We had some blips in the morning, but by the end of the day, 1.68% up. Dow Jones, S&P 500, and Nasdaq really pretty flat in the end of the close, but the Nasdaq was down quite heavily at the beginning. It just shows you the volatility is still in this market, even though it's in a choppy range heading into April. If we have a look at the sectors, something weird happened yesterday. We had consumer discretionary up, which is XLY, but at the same time, technology was actually down 0.95%. Very strange. Throughout most of this recovery phase, we've seen XLY and XLK, these two sectors actually perform very, very similarly and run with each other. Yesterday, they were almost complete opposites. Financials made a recovery, and the rest of them were kind of just down, or at least down or flat throughout the session. When we're thinking about April, as I've said several times, it is about, is there going to be a strong month? Yesterday, we had a bit of comments from the community. It seemed pretty split. Some people were bearish, some people were bullish. I almost think you could go with a 50-50 coin flip for how people are feeling about April. And that's very interesting because it is historically the most bullish month, or second most bullish month of the year. So everyone's 50-50 split, and there are good reasons to be so. Let's see whether the history plays out again, or it goes back to just being a very, very choppy market for the month of April. Usually, I believe April will give us a direction either way. So let's get started with the technical analysis, guys. First up, Volatility Index. Look, Volatility Index has been underneath 20 for a little while. When it closed the first time underneath 20, we knew that that meant we were going into a bit of a chop city phase, and that has been what is occurring. The more interesting things in the market right now are things like US 10-year treasuries. If we take a look here on the 2-hour, you'll notice actually made a new high yesterday, which had the markets worried. But as I've stated several times, and actually it ended up closing as a shooting star candle, I still think 1.95 to 2 is on the cards over the next couple of months. Will it get there straight away? Maybe not. But actually yesterday, that's quite a bearish looking candle. So if it closes or moves to a new low here, probably goes back down all the way down here, which could lead to the Nasdaq actually recovering. Remember, the Nasdaq is price sensitive to this as it reprices back to 1.95. But overall, I'm not concerned unless the 10-year treasuries go past 1.96 and 2. And I think that's where Wall Street will really be like, whoa, 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 and they'll crash that particular section of the market. The story is really more about this one here, which is the dollar index. And you can see the dollar index is bulling now into our 94 area. 93.30 yesterday. Incredibly strong moves here in the dollar index. If we go down to the 4-hour, you'll notice it's really moving up quite steadily. And I do believe that we should be moving towards 94 over the next coming weeks. This will be the chart to watch in April. If it gets past 94 and goes towards the 96, which is the next level after 94, I think then the market will get spooked by it. But probably upwards of 94, the market will be okay. Even though traditionally when the US dollar has been rising, that means risk off in the markets. I think this is kind of like the US 10-year treasuries. It's a repricing after a very steep fall in the US dollar in the last 12 months. It's important that it reprices, and it's pretty consistent with the narrative. I also just wanted to mention this one thing while we go into gold, and that is that actually a lot of the things that are going on in the stock market right now with reprices into value stocks, with some hyper stocks coming off upwards of 50 to 60% over this last kind of corrective crash, it's actually pretty normal for that to occur, and it's also healthy for that to occur. Now, a lot of you will be saying, Tom, don't tell me taking 50% on my portfolio is a good thing. the main reason it's good is it actually means the market is acting more rationally than we would suspect. And of course, with high valuations like they were during the pandemic, it makes sense for them to be clipped out of what seems to be relatively good vaccine news. So let's now take a look at gold and see what's going on here. 1680 was reached yesterday. That was the point of massive support here. What I'm looking for in gold is I want to see some form of structure formation. Do I buy 1680? You'd be a brave person to do so. But if you get a lightning bolt, if you get some kind of nice structural action, you can always look for it to buy it back up. Just be warned though, 1721, because of that high level of support that was found previously, it will now act as resistance. So gold's right on the dot, pretty much the most important zone it's been for some time. And if it gets through here, whoa, it could be very bad. I mean, look how good this support line's been consistently since April, since even the Feb highs over here. You do not want gold under this zone, because if it gets under this zone, it could reprice. And I'm going to say crazy numbers now. I think it could reprice back to $1,600. So that's only $18 or $84 off. But yeah, it's going to reprice fairly quickly to the next level. So be very, very, very careful around the 1680, guys. You've got to watch it. Silver is a very similar kind of thing. It kept breaking down. It's now hit 24. You would want a bounce tomorrow on this one. Look how it bounced it last time with a very nice hammer bullish buy here on the left-hand side. If it can't do that this time, it's just going to keep going. It's going to keep dripping down. I'm not sure if 23, a few people in the stream yesterday said 23, Tom, what do you think? 23 is okay. It has been bought off. I mean, every $1.50 matters in silver trading. But yeah, I could see 22 actually if it gets under here, then stabilization, and then most likely a recovery through what I believe is going to be the second materials kind of little mini boom that's going to happen into the end of the year. Remember, materials recovered till 2011 during the global financial crisis recovery. I think we're looking at a very similar trajectory with everything actually acting very, very similar to last time. In terms of the gains so far that we've seen in the market. Bitcoin traders, what's going on here? Well, Bitcoin is acting pretty technically. It has been coiling just underneath this 60,000. Yesterday we said, well, maybe we get 60,000 today. It looked like that wasn't to be the case. But if it continues to coil like this, look at this on the 4 hour. If it does this and then it makes a new high, even though it won't be through 60,000 yet, what do we know on the channel? Because it's coiled before a key level, it's going to blast that 60,000 and move on to the 62,000 over here. It's going to be a pretty large move, you would think, after it gets through 60,000, and that could open up 65, 64, etc. Every 2,000 level, I think, will be pretty important for Bitcoin. But once it gets through 60, I'm not even sure if it really worries about this 62. I feel like it wants, at that stage, 65,000 based on previous breakouts there. You got strong support around 57, previous resistance, previous support now, and the 4 hour 20. Remember, the 4 hour 20's already done what we like, which is the 1-2. We know this is one of the strongest pickup moving averages when it comes to taking trend in Bitcoin. It's been very, very consistent. Have a look over here on the left-hand side, 20 moving average, 4 hour through a bull run. We go back through another bull run, 20 has been very, very, very good. Look at it all the way up until it closes below. So do pay attention to that one. Continue having it on your charts. Tesla, well, guys, you should be pretty happy with this one. A strong bullish close. And more importantly, it got into the 600s, then instantly rejected it and found a bullish hammer. This is a great trade or a great close here for day traders that were looking at Tesla. We've got it on the hour, and the reason I want to bring this up is the 1 hour 20 was closed above, re-respected here with a little bit of a pullback back into these previous little peaks, and then further bullish commitment came through. Let's take a look at the daily just to really break down what happened. So new low was formed, rejection happened, and it closed clear above the previous daily high. Very important it did so. Now we've got to contest with, though, the 650 level. So 650, 660 will be some level of resistance. I've actually got this on a daily chart, and I'm going to look for the daily close break above. That's when I think we can go and we can contend with the next levels, being the 720, etc. So yeah, I'm looking for a daily 20 exponential moving average close, and that will probably coincide with around a 650, 660 close. And the main reason I'm doing that is because look at this on the way down. It's been pretty consistent with stopping it. The reason why I think it stopped here is because you had the 720 too high above. This time round, I'm looking for a clear close of the 20 exponential and above the 650, 660 zone. Once you get that, we can move back to 720 and we can start to talk about the dialogue of going 780, 800. For the bears in Tesla, well, it's about probably tomorrow's trade. I expect some movement up, then resistance to be found here. And if you push it back through, close under 600, there's really nothing stopping it before 550. And we've talked several times about how 460, 500 is exposed actually after this close as well. All things are around 600 right now for Tesla and the 650, 660. Well worth having on the charts. Let's take a look at IWM. This is the Russell. I think it's worthwhile mentioning this one today. And the main reason why is we found support previously, but look at this. We basically have the lightning bolt looking like it could occur. So we get a new high here. So say we make a new high, we're going to be getting through moving averages on the 2 hour, but more importantly, we have the trough, the peak, the higher trough, and then the higher peak. And we all know what that means. Change of trend towards the bull side. That will then expose going back up to the 230, 235. And we can be pretty confident that the bottom, at least temporarily, is in for the Russell. So all eyes will be on 220 on the Russell. I would have that one on my charts and be watching it with alerts. I think it's a very important technical zone to be looking at right now. Now we've trapped this Nasdaq, and I tell you what, we've trapped this one well as a community. This is amazing. Good work by everybody. Basically, we have a very good narrative here. We have lower highs coming through. That is not positive towards the bulls. You want to have higher highs and higher lows. We have a very good level of support, which we know is where the bears take full control around that 12,750 to 12,800 on the daily. And we have relative bullish intentions coming through on the NAS as well. Every single day it gets down here. Now, there are two scenarios. And there always are two scenarios, but there are critical points where it moves to the next level. If we close above 13,000, we move towards 13,176. That's the most likely participation zone. Then we move towards 13,300. But more importantly, we've broken this sequence of lower highs. And I think that will be very, very significant for bulls in the Nasdaq right now, or the tech index. If we then move more bearish, I am not confident in this level because of these lower highs. So if we move more bearish over the next couple of days and we get down to here, am I thinking this is the best buy zone ever or anything like that? No, because it's showing us weakness coming in, which usually means it wants to break and it will continue down to that 12,300, 12,200. So be very careful on the Nasdaq. This is a great chart to be looking at, and continue to watch that FANG chart as well that we brought up in yesterday's video. Both incredibly important to market sentiment right now. Let's take a look at the US 500. 3988 was reached a few days ago. We're coiling underneath this. It's acting pretty technically with strong support being found around that 3950. We can see it's trading at 3960 at the time of this recording, and I could see us putting further pressure on the 3988. Once we get through there, we're probably going to easily get through 4,000, and it all becomes about, you know what, it's going to be all about that trend line. And we're going to start watching the trend line, draw this one on the SPX, have it going out, and when the market eventually does hit that trend line, it will most likely find resistance. For the bears out there in the market, you're really looking at the Nasdaq. I just don't see how the S&P is showing us any bearish tendencies right now other than on the indicators and the fact that it's near the 4,000. But in history's case, whenever it stopped just before the 4,000, had the correction and then moved back up, it's usually moved to break the level and break it fairly significantly. Good luck out there, everybody. Remember to join us in the live streams for Wednesday Market Open. It's great fun having all of you in there. And of course, we'll see you in the next video. Bye for now, guys.